This computer. All right, so first thing you do is you go to the tab over here where it says your Fibonacci. Just draw it in the middle of the screen, just anywhere. Then what you're going to do is you're going to double click, say just on the top line, it's like double click on the 0.0, and then your fib retracement settings will then come up. Okay, your fib settings will then come up. All right, so once your fib settings come up, you're going to go over to style. You're going to go over to style, and basically this is how your style is going to look. You're going to have 0. Hold on. Make sure this is right. Hold on. Hold on one sec. Let me just make sure I'm telling you the right thing. 0. Yeah, so you have 0, 0.382, 0.618. You'll have 1, which is your 100. You'll have 718, 0.236, 0.5, which is your 50%, 0.786. You'll have 1.68. Okay. Let me see here. And then what I do is the levels, I have it set to percent. I have the level set to percent. I have my background like down to little, because I don't want that. I want it to be like clear so that over on this side I can see. So I have this. My labels are over to the right. This is in the middle. And then you go in and you basically save it. Okay. And then you click on then okay. All right. So now once you click on okay, now you go back over to your fib tool, and here are going to be the notes. The notes are as follows. Hold on one second. Let me get to the notes. The notes are as follows. Okay. Okay. Here's your notes right here of what each level now is going to mean. Okay. 0 to 100 is measuring from low to high. Always do low to high, not low to height, low to high. H-I-G-H. Okay. 50% is your equal point. Anything above 50% is for sales. That's premium pricing. It's for sales. Anything that's above 50% is for sales. Anything below 50% is for buys. Okay. All right, so I'm going to sit this over here. And now what we're going to do is we're going to come where I have this here marked up. And we're going to basically take and we're going to put our fib starting from the low. So let's just say for all intents and purposes, we want to go from this low right here, to this high right here. From this low right there to this high. So what we do is we do this and pull that right there. Okay, so I went from the low to the high. Then what you want to do is open this up so you can see. Okay, so 50% is your equal. Okay, when price is bouncing off of the 23%, the 38%, those represent sales. I'm sorry, and then also the 0%. So price gets here, and then now it's basically bouncing off of the 23. That's an automatic sale. It bounces off the 23, bottoms out right there. That's 102 pips. Okay. All right, price gets up to bounces off of this area. That is 165 pips. Okay. Off of the bounce. Okay. So we have a double top right here. Price swings back around, comes back. You could put a a sell limit right here. Now, my expectation is this is going all the way down to 100. Okay. So right now, price is bouncing down. So price gets down and it bounces off of this here 38, automatic sell limit or sell stop. Okay. When price is breaking, when price finally closes below this, not like this, okay. This hasn't, this candle right here did not close below 38.20. It closed above 38.20. Because remember, excuse me, I take that back. Price finally closed here on this candle above 38.20. Here above 38.20. Okay. So you want your second candle to close below 38.20. Okay. So so as we walk down, anything now below 50%, anything below 50% is going to be 50% is for buys. So if price comes and basically sits on top of the 70%, you look for a buy. If it comes and it does like this, boom, and it sits there, you're looking for a buy. Okay. If price comes and it breaks down to here and then it retraces up, you look for a buy. If price breaks below this, then you know then that it's going all the way down. Okay, so now if I tighten this up, you can see how price is respecting thus far. It's respecting this 38.20. It's been respecting this 38.20. Hadn't got down to 50% yet. Okay. So let's kind of go back through it again. Let's get rid of this. Let's get rid of this. Let's get rid of this. Okay, let's get rid of our fib. All right, and then so now you come over to your fib. Again, 0 to 100 is measuring from low to high. Always do from your lowest low. I mean, and you can even go down to, so you're not supposed to do it off the most recent high and low. It can be based off of any high or low. It's based on the highest high and highest lowest low. Okay. Forget you, Nia.
So, and is that on the time frame you're using?
Say what now?
Is it based off the highest high and the lowest low according to the time frame you're using?
You can do it on the 1 hour. You can
Okay.
do it on the 1 hour as well. You could do it on the 1 hour as well. From here to there. Let's pretend like that this is my low right there that I'm going to use. And then let's take this and let's stretch it back over to here so we can see. Are we on the low? Yeah, we're on the low. Okay. So now here, see how prices basically respecting this here 38.20. It's respecting that 38.20. So a setup would be like this. When you see price form this double bottom right here, okay, or even here, when price forms that double bottom and it comes up, if it forms this double top right here, okay, if price forms this double top right here, like this, okay, what you want to do, this is how I caught gold today. What you want to do is that you want to run your line across here, okay? You want to sit it on top of where that high breaks, gets to, stops, okay? Then what you want to do, Henry, is you want to set you a sell limit on this line because price hit a double top, boom, boom. Normally, price goes down to fill this gap down here, but you're going to, when you start seeing this, you're going to start seeing this here pattern more and more. Top, top, it's going to swing around, and then when it gets up here, your sell limit should basically take off, which will be right here, this candle right here. This is your sell limit. When this candle here hits that sell limit, it's going to basically go straight into profit, and then it's just going to start falling. Okay? It's going to start falling. It's going to come back. It'll come back and try to retrace, but it's not hitting this area. Okay? Even if it does, have your stop loss up here. But once this here breaks down and falls, you know, that's how I call GJ. Don't forget GJ. XAUUSD. Let's see here. See, that's how I call gold right there. Price came, hit my, because I had marked it up like earlier today. I marked it earlier today based off of this and this right here, based off of this high and then this higher high and then this high. And I said, okay, if price comes and hits this, I got a sell limit right there. Boom. Price came, if you look, that wick right there activated my sell limit, and pretty much I went straight into profit all the way down to here. It's like a quick $100. Okay. So you're going to start seeing now, here's this double top right here. Now, what I was expecting price to do was to do a double top, swing back around right here in this here area. Because if you notice, I have this here marked right here as an, you see that alert right there. I have this alert right there. I was expecting price, and I have this here blue line right there. I have that blue line right there. I was expecting price to hit this area and then go back down. But instead it hit this area and then it came down. Okay. That, for all intents and purposes, from here to here, what's that, 17 on gold? That's not 177 pips. That's a decimal. So that's 17, let's just say 18 pips on gold, you know. And so I got out like right around in here where I got at. I didn't stay in because I don't really trust gold. So all right, so let's go back to GB. Okay, let's go back to here. All right, so right now price is respecting this line. So basically, this is a buy opportunity when price hits this line, because basically what you're seeing is that what you're seeing is based off of the fib. Based off of the fib now. What you're seeing is that every time price is hitting this line, when price hits that line, basically it's shooting up. Here, here, here. Okay. Price hitting this line, here, here, and here, you're in for a sale. Okay. The pips between this and this is that. And so now what we're doing is we're sitting playing out this whole playbook right here. And now we're bouncing off of the Fibonacci now. And I'm on the 1 hour. Now, if you want, of course, you can do your entry on the 15. You know, and see, this is the thing that like is really starting to, I don't know, maybe because, you know, my trading is getting to be different, was getting to be kind of like crazy, is that now when I'm expecting price to hit in certain areas, I'll have my charts marked up and stuff, and it'll come and it'll throw a damn wick, and then it'll just keep on going. So I'm gonna have to learn how to start setting these limits, so therefore I won't miss these opportunities, because like here, that one wick there is, I mean, it's 34 pips. But I've seen it at times where price will basically throw a wick down 100 pips long within seconds. So here, your retrace, you're bouncing all the way back up. That's 149 pips, catching it off that bounce. Okay. So the key thing to remember is, where is the notes I put on here? Right here. Okay, here are the notes. 0 to 100 is measuring from low to high. Always do low to high. 50% is your equal point. Anything above 50% is for sales. Anything below 50% is for buys. So anything up here, you want to sell. You're selling to go down, unless you're going to catch it off of one of the um, I guess levels. Okay. So I'm going to take and I'm gonna mark this one up so you can see how I do it. Okay, let's go to the daily. And then let's remove drawings. Okay. All right, so I'm looking to see what I'm dealing with. Okay. I'm gonna put my zigzag on so I can see. All right, so basically what I have is I have a choice. Let's see here. Yeah, so we got a choice. We can run, let's see, let's go to here. This is our lowest low, our swing low, okay? This currently right here is our swing high, right there. Here, up here is another swing high, okay? What we want to do is, because we have a double top right here, price came back. So here's this here double top. After this here, after price comes up and then comes down real fast, I'm gonna put my line right there. I'm gonna put a line right there. This price came up, broke real fast, but it was at this level here. So now every time price comes back around, it's touching that level down for a sell. Okay. So now I'm going to turn off that. I got that marked. I'm gonna put this right there. Okay. So got everything marked as far as our swing low, got our swing highs. Okay, we're in consolidation right here. I'm gonna go ahead on and I'm gonna put my line right there. All right, so I got that. All right, so now I'm gonna pop down to the 4. And actually, let's see here. Go to my notes. Let me see something here. Okay, so we got our equal highs and our price structure down. Also, while we're here, let's look to see, especially down in the lowers, if there's any imbalance, which there is. So we got one candle here, 3 consecutive candles, 1, 2, 3. There's imbalance right there. Actually, not that much, but we'll still mark it. 1, 2, 3. Okay. 3 consecutive candles. 1, 2, 3. But because price came down to here and took this area out, we have no imbalance there. Okay, and we're on the 4-hour, which is where we want to be at. Okay, there's no imbalance anyplace else. So we got our imbalance. Let's stretch this out. Okay, so What happened? Okay. So now we got our imbalance. We got price locked in or boxed in rather. Okay. We got our swing low. We got our swing high. So we got price action completely boxed in now where we want it. Now we're going to hop down to the 1 hour, and now we're going to see what kind of structure are we working with. Okay. Price right now is ranging. So all it's doing is ranging. The distance between here and here is 221 pips. Okay. That's the distance. So price is, for all intents and purposes, price is hitting and bouncing off of this. Okay. So let's just double check and see if there's any additional imbalance on the 1 hour, which there shouldn't be. And there's a little bit right here. And there's none there. Okay. All right. So we got that piece done. And so now we're on the 1 hour. Okay. So now let's go ahead on and last but not least, we're going to draw a fib. So we're going to go from here to here. Okay. Now, if you notice here, this is like what I really like about this is that because see now, if you look at right here, 78.6 price got here. Remember we said that's our sell, that's our buy opportunity. That's our buy opportunity. Anything above 50% is our sell opportunity. Anything below is our buy opportunity. And it's basically playing out. Price got down to this area right here, went up for a buy. Price got down to this area here, went back up to this area that's 85 pips. Okay. Now, I can take the fib and I can go down lower. It's still going to be the same thing. Okay. So right now, price just bounced, hit off the 70%. And so now this is just a matter of let this here continue to range. And if we can catch any pips off of this, we'll catch pips off of this. Okay, so let me put that right there. And then let me put the notes back in here. Okay. All right, was there any questions?
And you didn't record that, did you?
Huh?
Did you record it?
Yes, sir, I did.
Hey, if you could drop it to me on YouTube or however you do it, I want to look at it all over again, if you don't mind, please.
Yeah, no, I hit the record right before you came on. Yep, still recording. All right, so let me go back to here. Okay. So basically what I've been working on for you guys, trying to learn it myself, and I'm kind of getting bits and pieces of it, is the system called smart money trading. We basically, in a sense, trade like similar to this here right now, at least with our mindset, because our mindset is that, we know that when it comes down to, for example, up here, that, this is all institutions right here in that area there, because because the purpose of the banks or institutions that have money is to basically, trade. If they're going to sell, they want to sell higher than they want to sell higher than the retailers, and if they're buying, they want to get in lower than the retailers. So what I've been trying to learn, and I'm learning it in kind of in bits and pieces, um, because it's kind of a different mindset to have, and so I don't quite have all of it down to where, I'm kind of feeling comfortable with it, but I'm getting to the point now where little by little it's starting now to make sense. Um, I don't really mark like I used to. If you notice, I didn't put any support and resistance lines anymore. I've kind of gotten away from support and resistance, because now what I'm doing is that I'm looking for certain areas to be hit. And now I do now a lot of price action. I'm looking for those lows and I'm looking for those highs. And if price is breaking at certain points. So I sent you guys in the chat a video that talks about how to spot liquidity. That's the first place where, I kind of started, where I could kind of see, how to mark up the charts differently and better. Because ultimately I will tell you that this method is going to be a little bit slower probably than what we're used to. But when we catch that right trade, it pays dividends. So last week, on my practice stats, let's see, last week I took, let's see here, let me write this down so I can remember as I write it down. Last week I took a total of 18 trades. This was this was in a 3.5 day period, 3.5 days. I took 18 trades and I had 16 correct. Okay, that's 85% accuracy. Okay, my average PIP was 18.5, was the average PIPs that I took. I got a total of 269 PIPs. And that was, and I made a total of $103 with an average lot size of 0.05. That's what I did last week. Yeah. um, I caught. I haven't got down to the 1 minute, like on one trade. Now, not that I'm, just ruthlessly doing it, but it just the setup was there. It was a setup like this right here. The double top was there. I set a sell limit, and then it just basically came, and there was 40 pips right there. Okay, so I'm going to be kind of working slowly now, starting to introduce this here to you guys, because I want, like I said, my main thing is that for you to start now walking away literally with you know 200 pips, a pair, you know 5, 6, 700 pips, a week. Now I know that in terms of what we literally need, but once we got our needs in the bank, now this is going to make it where our trading is going to be on a whole different level and a lot more efficient, and a lot less trading for that matter. um so this is something that I'm working on right now. I'll be kind of feeding it in little by little, kind of showing you how to use different tools. The main thing, like I said, right now is that, especially like um for Nia, like, and also for Henry, when you definitely see the way this market is really like on this, the way it's working is that if price makes a double top like this, the next one that it forms is going to be, price is going to come to like this, and it's going to break all the way down. Those are the types of, and you're going to begin to see, because what now, it's like now when I look at like price, it's like, it looks totally different. You know, everything looks different on the charts now, but that's a good thing. They have these things called order blocks and different things like that. I still don't quite know the full definition of everything, and there's a specific way that they mark up the chart, so I'm still trying to learn that. But when I get all that down, I'm going to bring that, and then I'm going to start teaching it to y'all, so that way y'all can be basically up to speed on it. So that's pretty much, you see what this one here is doing right here. Yeah, so this here goes right there. See this right here? Price came right here, boom, came out of there. Came here again, boom, came out of there. Boom, came out of there. Boom, came out of there. It's the same identical move, because of this one little move right here, where they came in, they had this double top right here. This is where liquidity is. And then now they come and then make this move right here to the upside, straight up. Price shoots straight up and then falls rapidly. Okay, that's a place of interest. So now I'm going to put my place of interest right here, and every time price comes to this here area right here, now I'm going to look for a trade. And from here to there, 273 pips. And if you look at this, price went straight down. Okay. Again, not this one here. Price wouldn't have came and got your sell stop. It wouldn't have quite got your sell stop, but that's pretty much it. So that's what I've been working on, trying to get you guys ready, and especially during this year time, want to try to learn something a little bit different, and kind of keep us keep our tools sharp, where we can, learn new things. And so, yeah, so that's pretty much it. Actually, this goes like this. Yeah. So that's pretty much it. So is there any questions? Henry, you got any questions?
No, I'm had to do like intro and just watch the video a couple times.
All right. So let me go ahead on and let me